The one concern we have coming up, though, very shortly, and again, it's not a major concern, but it is supplying downward pressure to market prices, is the 20-day moving average is close to crossing the 50-day moving average. So again, if that occurs, that's not a death knell to the markets, but it does suggest more downward pressure. Here's what you need to know. Well, you can't really say before the bell this morning because there's no bell. But for tomorrow's bell, here's what you need to know before tomorrow's bell. The first 5 days of January, we've talked about the Santa Claus rally. The Santa Claus rally did not come. Santa Claus did not visit Broad and Wall this year. He missed it by about 0.5%. The next kind of important, statistical indicator, and again, these are just Wall Street axioms, and this is kind of just averages of how things work out over time. Things don't always work this way. But one thing that investors do pay attention to is the first 5 trading days of January. Now, I realize that today is January the 9th, right? But we're not talking about calendar days. We're talking about trading days. So the first 5 trading days of January ended yesterday, and the market was up 0.2%. So basically flat. But the good news is that it was positive. So the first 5, barely positive, but up 0.2% for the year so far as of yesterday. So the first 5 days of January have been positive. So that triggers the first step of the January Barometer. So goes the first 5 days, so goes the month, as the saying goes. Well, if we're only up 0.2% for the beginning of the month, that doesn't really bode well for the rest of the month. We might be up a little bit by the end of the month. But again, this is the setup. So as goes the month of January, so the January Barometer is what happens for the entire month of January. So goes the month of January, so goes the year, right? And so historically speaking, if the first 5 days of January are positive, the market tends to be positive for the month of January about 86% of the time. And if January is positive, the average return for the year is somewhere around 7 to 8%. So again, just some good news for you on this holiday shortened trading week and as we get ready to go before the bell tomorrow. So again, just paying attention to that. Now, the other side, technically speaking as well, the market's doing okay here. It's been consolidating. We talked about yesterday that we've got this kind of rising trend line in the markets, and that is kind of holding on here, but just barely. We have this consolidation going on, this compression of price here, this kind of wedge that's developing in the markets. The markets are going to need to break out of this here soon in one direction or the other. If it breaks to the downside, we're going to come down and test the 100-day and then go below that potentially and have a bigger correction in the markets. If the market can muster a rally here and get above the downtrend line here, then of course we can make a little bit of a move higher here. The one concern we have coming up, though, very shortly, and again, it's not a major concern, but it is supplying downward pressure to market prices, is the 20-day moving average is now is close to crossing the 50-day moving average. So again, if that occurs, that's not a death knell to the markets, but it does suggest more downward pressure. That's applying a lot more resistance overhead to the markets to make that move higher. So again, if the markets are going to make a move and have a positive month, it needs to kind of start on Friday and really into next week as we head into the inauguration. So again, watching that very carefully just from a technical basis, but again, here real short term, the markets are doing okay holding that rising trend line at the moment. So we'll see what happens next. But that's what you need to know before the bell tomorrow.